Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. It's the new financial year that's now upon us, but there are several of tax changes and financial rule changes that you need to be aware of that starts to get implemented from now. So several significant financial rule changes have taken effect starting today, that's April 1st of 2025, and that will impact your own taxation, tax payments, digital payments, pension schemes, and there's a lot more that you really need to know as well. Well, first of all, the big budget changes. Remember, the budget was announced on 1st of February, and the changes that have been implemented that have been announced in the budget will get implemented starting today. That's April 1st. Remember that in February there were massive tax cuts that were announced in the budget speech by Finance Minister Nirmala Sitharaman, especially under the new tax regime that we had got to know that the government had announced a tax bonanza, a tax-free income of up to 12 lakh rupees is something that was announced, and that will take effect from today, which means that in case your income is under 12 lakh rupees, it is a no-brainer for you to choose the new tax regime because you effectively pay zero tax on that one starting today. So a lot of tax savings for you over there as well. Now, of course, apart from this 12 lakh rupees, there were a lot of other changes within the slabs also, which you must know. So there was also an additional 1 lakh rupee change. Remember, earlier in the previous regime, it was understood that 0 to 3 lakh rupees of an income will garner you no tax. There was nil tax on 0 to 3 lakhs. This has been changed to 0 to 4 lakhs, which means any income up to 4 lakh rupees will have zero taxable component on it. You do not need to pay any tax whether you are in the old or in the new tax regime. Now, from 4 to 8 lakh rupees under the new tax regime, you will have to pay 5% of a tax. From 8 to 12 lakh rupees, you'll have to pay 10%. From 12 lakhs to 24 lakhs of an income, you'll have to pay now 15% of tax, whereas the highest tax bracket of 30% tax, which was initially being seen as for those earning incomes of over 15 lakhs, now this band has been really shifted to over those earning incomes of 24 lakh rupees and above. Only you will have to pay a 30% tax on this one. Now, you will say that why are we talking about the slabs if in case 12 lakh rupees is the benchmark under which you have to pay no tax. Remember, the tax slabs are always advised as per the finance bill, but here the government has taken a decision of footing the tax on your behalf in case you are under the 12 lakh rupee income bracket. Now, remember, beyond this also there is a 75,000 rupees of a standard deduction. So, ultimately you need to understand that in case your income is 12.75 lakhs, you effectively pay zero tax. Apart from this, there are changes in the UPI IDs as well. In case, remember, this is to enhance the security. The National Payments Corporation of India, or the NPCI, has decided that they will deactivate any kind of UPI IDs that will link to mobile numbers that have remained inactive for an extended period of time. So, in case you had a UPI ID that was linked to a mobile number, but you've not used that at all for a long period of time, those UPI IDs will get lapsed. UPI users linking their UPI accounts linked to inactive mobile numbers will have to update their new and operational numbers by latest April 1st to prevent any kind of a deactivation of their UPI accounts as well. That's something that you need to know in case your UPI ID was linked to a mobile number which is now inactive. That account will now get a chance of getting deactivated. So, keep an eye out on that. Apart from this, for all the pensioners, especially the central government employees, there are changes that have started to take place effective today. From today, the much anticipated introduction of unified pension scheme will take effect, which actually means that there will be an option for the central government employees who are currently under the national pension system to switch to the central government scheme of unified pension system, and this will help you to get higher pension as the government has now announced. So, employees with at least 25 years of service will now get of 50% of their average basic salary. That's the last 12 months of salary drawn as pension now. This is much higher than what you would be getting in the NPS. Also, the minimum guarantee also comes in. At least 10,000 rupee per month of a pension is what you will get as a central government employee if you have had a minimum 10 years of experience or a service with the central government. So these are the two new changes. In case you do fall under these categories, ensure that you switch to UPS to get the benefit of higher pension. Apart from this, for senior citizens, there's another good news. There will be enhanced TDS exemption for you now. So the tax deducted at source, the exemption limit on the interest income for senior citizens has now been increased to 1 lakh rupees. Remember, this announcement was made earlier, but the effective date is starting 1st of April 2025. That means starting today, you will be getting the benefit of higher TDS limit. So, for instance, the senior citizens employees, they were already getting benefit from higher exemption on interest income on FDs, on RDs, and the TDS threshold was 50,000 rupees. Now, this has been doubled to 1 lakh rupees per financial year. This means that the banks will cut TDS only if your total interest earnings are higher than 1 lakh rupees. So, in case you want to simply understand, as a senior citizen, if you have investments in your FDs, in your RDs, and you get an interest income from those, your interest income above 1 lakh rupees will only subject to a TDS deduction from banks. Below that, your interest income will not attract any kind of a TDS, and that's a huge relief for all the senior citizens. It will again add on to getting you a higher money in your hands because you will have some tax saving on that front as well. Now, there are also changes as far as the PAN and Aadhaar card rules are changing as well. So, in case up until March 31st, you have not linked your UPI or the PAN card with your Aadhaar card, that's something that will actually now cause you some troubles. So, up until March 31st, you had the chance of linking your PAN card with your Aadhaar card. If you have not done that, now you will not receive any dividend income. You will also not benefit from the TDS changes, and there will be no credit that will be given to you in the form of Form 26AS as well. So, basically, in case you had the chance of probably looking for any kind of a tax refund from the government. Say for instance, in a given financial year, you ended up paying some tax, but later on your CA told you that you have ended up paying higher tax. There is a case of a refund that you have an option that you can ask the government or the tax department to refund you some of the tax. Now, that benefit will not be given to you in case your PAN and your Aadhaar card are not linked. So, you stand to lose out on the benefit of tax refund in case on a given financial year you end up paying higher tax to the tax department. You will not get that now. Other thing that you need to remember is that the deadline for ITR returns has also been extended. That's a good news for all the taxpayers at large. The deadline to file updated returns has now been increased to 48 months. Earlier it was only 1 year. By the end of every assessment year, you can actually see previously only 24 months in fact were given to you to file any kind of updated returns. So, 2 years. Say for instance, you filed your ITR, but then later on you found out that you need to make some changes and you need to revise or update your ITR. So, that could only be done in a 24-month period or a 2-year time frame. Now, that has been increased to 48 months. So, you will have more months to really look at, check your ITRs and see if there is any discrepancy and change it. So, that's a good change that will start happening starting today. Now, apart from that, there is also a change in the priority sector lending. From April 1st, all the home loan borrowers can avail higher home loan limits under the priority sector lending. Borrowers can avail up to 50 lakh rupees in metros, 45 lakh rupees in tier 2 cities and 35 lakh rupees in small cities as well. So, that's something that you can definitely look at. Apart from that, in case you have your money in savings accounts in banks, you need to know this. There are changes in the minimum balance requirement. Banks like SBI, Punjab National Bank, Canara Bank have already come out by talking about they are updating their minimum balance requirements, and if you do not maintain those minimum balances, you may actually end up paying some penalties starting April 1st. So go, in case you have some accounts in these banks, check them out. What are the new minimum balance requirements that you need to adhere to, and ensure that you have that minimum balance to avoid paying any kind of penalty. Apart from that, there is also a change as far as the calculation of the annual value of self-occupied property is concerned. The government has now simplified the calculation of annual value of the house for income tax purposes as well. Now, this is a good news as well, especially for those people who have 1 or 2 houses under their names and they have not rented out those properties too. This will help taxpayers. They can easily file tax returns without any calculation. This is also because they can actually now claim the value of 2 houses as 0. The government did amend this earlier and now has agreed to understand there can be 2 self-occupied houses. Now, I'll help you understand this a little in an easier way. Remember, earlier the rules were stated that in case a homeowner had 2 houses, so the first one would be considered that you are yourself staying in this, and therefore this does not have any rental income for you, and therefore you would end up paying any kind of extra money on this house. But in case you had a second self-occupied house, whether or not you had rented it out, it was always considered as a property that is giving you some amount of money, and therefore it would be considered as a rental income opportunity for you, and therefore 2 self-occupied houses could not be tax-free. But now, under the new rules, you will get to save taxes on the second self-occupied house as well, making it easier for property owners to determine the annual value of their homes without altering the 2 property limitation there. So that's a good one. The last one that I need to let you know is that for cheques, when you go ahead and look at some of the cheques, there is some positive pay system that has been introduced. To prevent cheque fraud, banks will now introduce a positive pay system. If you issue a cheque of 50,000 rupees or more, you must electronically also provide the details to the bank to verify before the clearance of the cheque. So this will again help you in saving your money and ensure that you have given your own permission to the bank electronically before the checks are cleared up as well. So there could be some more additional benefits when you're dealing with checks. If you're a businessman, you deal with checks off and on, then here is some kind of a change that will ultimately help you, both the customer, the banker, the one who is issuing the check, and the one who is receiving the check as well. And the banks will get insured doubly from you via getting the electronic verification from you that yes, you have released this check of 50,000 rupees or more, thereby providing that additional security for yourself as well. So those are some of the new financial rules that have started to get implemented from today. In case you have some doubts about some of them, you can definitely mention in the comments, and we'll be probably able to create some more videos to help you get greater clarity onto those. In case there are some of those points that you could not understand very clearly, again you can mention in the comments, and we can actually do a detailed video on all of those as well. But for now, it was important to tell you all the 10 changes that have got implemented starting the new fiscal year. Hope you have a great one. Stay tuned on Business Today Television for more such videos.
The new education policy debate is heating up. Former Congress President Sonia Gandhi